You see the headlines, everyone. Horrific crash incoming. Recession on its way. The stock market crash is not over yet. All the while, inflation out of control, interest rates rising, debts, spending, global economies in chaos. Fear sentiment across headlines and across social media off the charts. Are you ready for what is happening next? What is up, everyone? Welcome to Crypto Capital Venture. Thank you for coming by. Let's jump into the video. This is an S&P 500 chart. We have to talk about what's happening at this 50-week moving average. Before we do, this is not a fear video. I'm not doing this video to create any type of fear, uncertainty, or doubt. We see that all of the time in crypto. But there's one thing that is true. On this YouTube channel, I say all of the time, it's a huge principle of all my analysis and the news that we track. Expect nothing, anticipate everything. That's a principle my father taught me when I was younger. And it applies to life, and it applies to these charts, and it applies to what you see happening in the news across the world right now. And we're gonna talk about that. Do a quick Google search, stock market crash. You will see the headlines. We're not in this bullish, friendly environment for traditional and crypto markets. And not only that, everyone, Bitcoin has never traded within an environment of this fear sentiment being where it is ever. It's never traded in this environment before. And not only that, it's not just a fear sentiment. The numbers really are not looking too good across the world. This just came out. UK inflation tops 10%, underlining gloomy outlook for Europe. And it is kind of gloomy. And not only that, we've just covered this on the channel last week, Trueflation data. This is on-chain data, Oracle data from Chainlink, I believe, that's suggesting that inflation is higher than what they're telling us anyway. And I think this is something we've already known, but that's a big piece of it. What is being hidden? How bad are things really? And then the headlines continue. This is what's happening across the headlines. We have big short investor Michael Burry dump stock portfolio after market crash warnings. Important tweet. Net consumer credit balances are rising at record rates as consumers choose violence rather than cut back on spending in the face of inflation. Remember the savings glut problem? No more. COVID helicopter cash taught people to spend again, and it's addictive. Winter coming. Remember the money printers just going crazy? Remember people spending like crazy? It was just a couple years ago, economy booming, stock market just cruising to the upside, Bitcoin cruising towards all-time highs. Well, now we're in an environment where consumers are having kind of a tough time slowing down their spending. And guess what? Inflation, interest rates rising. That is not a good environment. Those are not good ingredients. Then we have this. This is the real Kiyosaki, opening my closed mind. He says, after listening to Harry Dent, I'm buying US Treasury 2-year bonds. Also, Jim Rickards is calling for the biggest crash in history to occur September 21st, 2022. That doesn't make it so. It doesn't make it that it's guaranteed to happen, but there's a reason for that prediction. And you can do a quick Google search and you can find this data, why America is entering a horrific collapse, right? Whatever the headline says. And you can just see the warnings. You see the negative sentiment across the world. The thing about it is it's not just negative sentiment. The numbers are bad. And that is why we need to pay attention. And there is wisdom in paying attention. And so we can take all of that and we can just put it aside for a second and we can say, let's just look at the charts. Let's look at the charts from a technical analysis perspective. Here's the S&P 500 index. Now, it was just the end of July. I was doing this video and S&P 500 was just basically breaking through the 20-week moving average, this green line here, and we were discussing how it's on its way to the 50-week moving average. Now, here's the chart now. It has reached the 50-week moving average. The reason I was discussing this, the reason I'm tracking it today is because this exact move happened back here in 2008, in May of 2008. 20-week moving average in green, S&P 500 making its way through all the way up to the 50-week moving average in blue, and there was resistance. And this is the rally, this is the move that happened right before the 2008 crash. The 2008 stock market crash. And just one more time, everybody, a reminder for you. If you're a crypto holder, Bitcoin, altcoins, whatever, it was not trading when this happened. What would crypto markets have done in that environment. And here we are. This is a 2008 stock market crash. Now here we are on the charts. Don't know how this weekly candle will close. There's still 2 days, 4 hours left or so on this weekly candle for S&P 500. But this is probably a good technical analysis warning to pay attention to this area. In that video, we discussed look for resistance at the 50-week moving average or look for a bullish confirmation, break above. But right now, with everything going on in the world, and right now with what we're seeing collide between real world data, inflation data, and just fear sentiment colliding with this technical analysis data, it's not looking too good. I've maintained this opinion that we are in the middle of the bear market and it's not over yet. The worst, in my opinion, is not over yet. And that's what this is. It's my opinion. You go to a Bitcoin chart. This green box that Bitcoin is within is this massive macro Fibonacci. And all the Fibonacci is, to put it very simply, is a previous swing low of some type to a swing high, and it's a retracement area. It's a consolidation area, right? It's a cooling off area, a reset area, whatever you want to call it. And that's the last bear market low to bull market high and this pullback down. It's an area I've tracked on this YouTube channel for years because this is an area in bear markets where Bitcoin trades not only within and consolidates at, but it actually has traded below. Here's 2018, and you can go all the way back to the 2015 bear market low. And here it is in 2015, trading below that entire Fibonacci pullback area. And here we are now, Bitcoin in the middle of that channel and actually hasn't even traded below this massive 786 line just yet. There's no guarantee that it will. But again, what we do on this YouTube channel is we anticipate all of these things. So at the confluence of what is happening here from a technical analysis perspective that has remained so consistent for us on this YouTube channel for years, at the confluence of what is happening here is everything we see going on in the world, the chaos of the headlines. And again, while this is not to instill fear or uncertainty or doubts, and I'm not trying to create this clickbait video, there's such wisdom in just simply, at the very simplest, if you take anything from this, expecting nothing but anticipating everything. And part of that everything is the potential for a huge crash. And if there's a crash, Bitcoin on these charts would actually remain consistent if it actually broke below the 786 and bottomed out. No guarantees that will happen, but it would remain consistent with historically what has happened on these charts. So a crash could very much lend into the consistency and harmony that we see on the rising trend of Bitcoin on the long term. You all know I'm bullish on crypto. I'm bullish on the space. I'm bullish on these charts. But right now, in the short to mid term, there is so much happening that we have to be very, very careful, and we have to prepare for every situation. And one of those situations is downside. Let me know in the comments below what you think is going to happen next, how you're feeling out there, how you're preparing. Hit the like, hit the subscribe. I'll see you in the next video. God bless.